Big changes are happening with Airbnb investing. And if you're not paying attention, you could be missing out on once in a lifetime opportunities. This isn't just another market shift. This is a game changer that will make it easier than ever to build massive wealth with short-term rentals. More cash flow, more tax savings, more financial freedom. Yet, most investors still have no idea what's coming or why they need to pay attention to it. I know this firsthand because I scaled my Airbnb portfolio from $30,000 invested in one single property all the way to a $10 million Airbnb portfolio that is now generating 7 figures in income. And today, I'm breaking down why Airbnb investing will never be the same again. And if you've been waiting for just the perfect time to start to scale, this is it. Let's dive in. So what's happening that's about to change the game for all Airbnb investors? 3 major things are happening. These shifts are creating major opportunity for short-term rental investors. Number 1, more properties are hitting the market. Now, given the time of the year, that's not really a big surprise. When you're coming out of the winter, the spring season typically warms up the real estate market. But I think because of the election and some pent-up demand, we are seeing a lot of people are actually getting a little bit more anxious and they're going, screw it, I either need to move or I'm just ready to sell and I'm sick of waiting and finding out what's going to happen next with interest rates and home prices. Overall, they've stayed pretty normal. We were expecting to see an interest rate decrease after the new election, but it didn't happen. So I think the people are going, you know what? Spring's going to come a little bit earlier this year because we need to get some things done. Number 2, we're seeing a lot of rising demand with Airbnb in general. I think Airbnb operators are evolving. We're becoming smarter, sharper, more capable than ever. Now, what does that mean? The quality is increasing. The types of stays are getting so unique and specialized that a hotel simply cannot keep up. That's why we're seeing less demand for hotels and a little bit more going toward Airbnbs. Plus, I think it's becoming a little bit more normalized to go to. I'd still meet people that have never dealt with an Airbnb and they're like, what the hell is this? It's kind of funny when you meet those people. Again, it comes down to the adoption rate, how marketable and well-known something is to make it kind of a normalized product. There's all these things that are happening, but again, I think a lot of people don't realize that Airbnb is still early in its years in terms of a marketed product. Short-term rentals have existed for hundreds of years. You know, that's not new. The weekly rental is not a new thing. Airbnb is just the Q-tip to the cotton swab. It's the branded name for a short-term rental. And that brand is picking up steam. So breaking it down, what are those 3 things? Changing travel preferences. Remote work flexibility is another big factor I've been seeing. The unique experiences that Airbnb can offer is also becoming a big play. In fact, that's one of the things that I'm leaning into this year. I'm trying to create more specialized stays. Really luxury, high-end, unique boutique motels are on the agenda. Stuff that nobody's really done here in Michigan. I think it's overdue. Basically, travelers out there are saying goodbye to the chocolate mint that used to be on the pillow, and they're saying hello to unique Airbnb experiences. And number 3, the one that you guys are all probably waiting for, bonus depreciation is possibly back. We've been seeing people talk about it and we're not 100% sure, but there's a pretty dang good likelihood it's going to be coming back, or at least it's going to be extended. What do I mean by that? So right now, bonus depreciation used to be 100%, but we're in a current phase-out schedule. So that schedule is this, and it comes from the Tax Cuts and Jobs Act in 2017. It initiated a gradual phase-out of bonus depreciation, and it started in 2022. And then in 2023, it dropped by 20% to 80%, and in 2024, it went to 60%, and now here we are in 2025, and it's down to 40%. Next year, it'll be 20%, and then in 2026, it'll be 0%. That is if we don't make some changes, and it sounds like that is on the roster for Trump. Trump has said, hey, he's going to bring back bonus depreciation. Think about it in terms of the tariffs. The tariffs are designed to create more tax on goods coming in and out of the country. So if that's the case, that means that you're going to be incentivized to build in the country. So ideally, there's got to be something to offset it because it's a horse trading game, right? That's how taxes work. Some things will go up, some things will go down. And depending on how you navigate that and what's agreed on within Congress, that's how it works out. Now, there's a lot of tax professionals out there trying to predict what's going to happen. They're doing all this modeling, and year after year, they're wrong. They're not completely wrong, but they never get it perfectly right because what actually happens between a plan and the actual thing being executed is always a little different. And I think it's likely that while people are saying it's going to come back 100%, it will probably just get extended out, or maybe it'll go back up just to 80%, maybe 60%. I'm not sure, but I'm hopeful it doesn't completely go away because it's a great tax advantage and it really does help keep investors investing. Now, at the end of the day, the more we can keep the money moving within the market, that's good because once we get stagnant, that hurts all of us. But hopefully, whatever the case is, the bonus depreciation looks likely that it will end up going back in place, or at least it will stop dropping. And that will keep investors more interested in investing here in the US. But if you look at it at face value and the phase out is going to continue just as it's been set to do, guess what? The sooner you take advantage of it, the more benefit you can have. The longer you wait, you're going to miss out on major tax savings, and 20% differentials can be tens of thousands of dollars depending on how you're doing it. So if you can save tens of thousands of dollars right now, you should probably get after it, right? I mean, it's only February, so you got 10 more months to go. Let's make it happen. And why is saving taxes so valuable? Let's use an analogy. Right now, most of you are paying what, 25% in your taxes? You know, on one hand, it's the fair share conversation. I don't want to get too deep into that. But what I will say is, when you look at it from a time value perspective, if you're at 25%, that means of these 4 days that you are working, one of those is not for you. Only 3 is for you. And for anybody that's at the 33% tax bracket, that means of the 3 days you're working, 1 is not for you. If you're on that quarter, that means 1 season, 3 months of the year is not for you. And for the 33%ers, a third of the year is not for you. That's pretty scary when you look at it like that. And I've been in both of those scenarios. And that's why when I learned to look at taxes differently, I realized it's not really about what you deserve to pay, what a fair share is. There's a tax code, and that's all it is. It tells you, hey, if you put your money in these things, we're going to give you an advantage. So there's no STR tax loophole. There's none of that. They're just tax codes that you can follow or not. And as an employee, you can follow them. As an investor, you can follow them. As a real estate developer, you can follow them. Whatever you want to do, you can follow them. But if you don't, you're effing up. There, I said it. You're definitely messing up. Like, you need to change how you're looking at taxes, because I was taught my whole life, just pay, just pay, just pay. What if somebody was teaching you, hey, just learn, just learn, just learn, play the game right back. Don't pay, play. And once you start changing and adapting your strategy, everything changes. You start thinking about your finances on a much smarter level, and then you start learning about how you can take advantage of these things that are available to you now, and they are slotted to go down year after year for the next 2 years. They may stay, but while it's still in play, you need to take advantage of it. Oh, and one more thing. What the hell is bonus depreciation? Allow me to explain. It's a tax incentive that allows property owners to deduct a large portion of the purchase cost of the property up front rather than over the whole lifetime of the property. So if you have eligible costs that could be deducted up front versus over the whole lifetime of the property, that can be very helpful for 2 big reasons. One of them is time value of cash, right? So let's say you just put together a property, you bought the property, you rehabbed the property, you designed the property, you furnished the property. What are you? You're broke. You're broke. Because after you set up a property, it's expensive, and you go, holy crap, I don't have a whole lot of money. I better make some money ASAP. Right? That's what happens. And guess what? When Uncle Sam comes up and he goes, hey, congrats on another great year of being an employee. You're going to owe me for your $100,000 a year job another $25,000. And guess what? Probably don't have that $25,000 sitting, because what did you do? You tried to invest in your dream, something that you thought would be special, and you don't have it. And it's a very scary, weird feeling to have. So what exists that can help you? Aha, bonus depreciation. So you can do regular depreciation on a fixed schedule, or you can take it up front, or at least a larger portion of it up front. And if you do that, that can help on your taxes today. So if you take it over the hold period, that's almost 30 years. That's great. But let's say you need to save those dollars a lot sooner than 30 years from now. So in that case, you take the bonus. And if you take the bonus, you could be writing off potentially tens of thousands of dollars depending on your financial situation. And tens of thousands of dollars really adds up. Even if it was $10,000 less that you were going to owe versus the $25,000 you were going to owe, that's $15,000 left. And $15,000 when you only made $100,000 is way better. That pulls you down to an average 15% tax bracket, which is way more tolerable than 25%. Now, I don't know about you, but if my taxable rate of the things I give away to charity or Uncle Sam was 10% or less, I'd be pretty happy about it. And that's where you can be if you use these things correctly. So hopefully you're starting to figure some things out. You're starting to see the value of paying attention to taxes when it comes to short-term rentals. And you're seeing that right now is a pretty dang good opportunity to invest. We are seeing more demand. We are seeing some properties hit the market. We are seeing that bonus depreciation might be here to stay or go back up to 100%. And something we didn't even mention was there's still something called cost seg analysis, which is another way to write off the bulk of your costs on these properties up front. So there's a lot of ways that you can do amazing things if you start paying attention to the tax system. You are not trying to defraud anybody. You are not trying to get one over. All you got to do is follow the tax code. And can you imagine, with a little bit more education, a little bit more normalcy, how much further along you would be with your finances? Just be in the room. Figure out a way to be in that room, listen to videos like this, and hopefully if this is helpful to you, like, share, comment, and throw some support our way. We want to keep making these for you guys, and all you got to do is like it and share it. I mean, it's a pretty easy trade-off if you ask me. So obviously this strategy can lead to significant tax savings. It's going to lead to more cash flow because the more money you're able to deploy in your own investments, you're going to be able to grow those investments even faster, which will create more cash flow. And that's going to lead to more accelerated wealth building. And what is that typically? It's the appreciation. You really undervalue the appreciation. I was talking about this example earlier today. One of my first properties I ever bought, it only netted about $500 a month. So that's about $6,000 a year. And let's say I had about $1,000 of repairs throughout the year. So that's $5,000 net per year. About 10 years ago, I got this property. So let's call it $50,000 of net dollars made from this one property. Now, I had tax savings along the way too. Now, those tax savings, I'm not even going to count them. Now, let's just say it was saving me $5,000 a year. And again, that would be another $50,000 of tax savings. But I'm only going to focus on the cash flow right now. What happened in conjunction with the appreciation on that property that I didn't see coming? The property value has gone up over another $130,000. So that's more than double of what the cash flow on it was. So if I sold it, I'd be in a really good spot. And I did not see the cash flow growing like that. Now, luckily, because of all the units we bought, a lot of them have created that similar level of equity over time because you really undervalue how much that's growing. But what that's given me is a little peace of mind because that equity is something I can either sell if I need cash, or if I want to leverage it so I can buy more things, I can use it as equity, get a loan on that equity, and go buy more things that will create more cash flow. So this is why it's so key to consider buying and creating more wealth. And whenever you have a tax deferrable advantage, this just kind of goes all in sync. It's like a triple play of wealth building. And this is how the rich get hyper rich. And I'm not there, but I would like to be. Maybe you would too. Maybe even just a little bit rich. Weekend money rich, right? Just 1 week in a year, we just go blow like 10 grand on a great vacation. I'm here for it. I hope you are too. If you want to capitalize on this before it's too late, here's what you need to do today. Buy a short-term rental before the year is over. That's all you got to do. You just got to close on it before the year is over. And you got over 10 months to figure this out. So kind of easy, right? And if it's not easy, let me know what you think is hard so I can answer it for you. Or come join our mastermind. I'll teach you how to make it easy. And I know a lot of people are always concerned about costs. Like, what's it cost to be in this? What's it cost to buy this? But there's another cost, right? What's the cost if you don't? What's the value you miss out on if you don't take that action? That's sometimes far worse than not taking any action at all, right? And again, if you could be in a better situation year after year, compounding benefits of owning these properties earlier, trust me, you will not regret it. Go talk to any real estate investor that's been successful and has 10 or more properties over the last 5+ years. Ask them these 2 questions. Do you wish you would have started sooner? And do you wish you would have bought more aggressively? If they say yes to both, there's your sign. Because if you go talk to your mom, dad, or your brother that really doesn't have any real estate, maybe they never even thought to do it, they're going to tell you no. And that's just proof you're in the wrong room. And if there's one thing I've learned as an entrepreneur, when you're in the wrong room, you're going to get the wrong answers. And you can't grow in this direction when everybody else is telling you to go in that direction. So find your compass, find the people that are going to make you successful so you can achieve these same results. Okay, so after step 1, what's step 2? Get the cost segregation study. Because no matter what year you actually put this on, you still have this available to you. Thank goodness, because it's an amazing tax advantage. I see tons of people save big money on this every single time they use it. I know I've saved well over $100,000 in taxes just by using cost seg analysis. Trust me, it's amazing. Because what would have happened if I put that $100,000 to taxes? I'd just be a little bit more depressed and a lot less wealthy. And who needs that? If you guys want to be in a more positive situation financially, you want to have more control on what you're doing in life, and you just want to follow the tax code that all of us should have been taught day one, which is a damn shame we weren't, this is your opportunity. And step 3, it's simple. Get with a real estate tax strategist. Could be a CPA, could be a tax attorney. I'm not calling myself a professional real estate tax strategist, but I could probably steer you in the right direction. And I do think that when you are working with these people that understand the concept of working with the tax code and real estate, which is an incredible asset, which has made more multimillionaires than anything in the world ever, that's exactly what you need to focus on. You want to make sure your structure and your execution are being handled legally and you're in compliance. Because being out of compliance can be ugly, especially if you get an audit and you lose, Knock on wood, hope I never get there, but that's why we have CPAs, to make sure that we have a professional looking out for us and we'll handle all that unfun stuff I never want to deal with. Step 4, scale your portfolio and repeat. Sounds obvious, but is it? A lot of people, after they get their first 1 or 2, they get stuck. And when you get stuck, you kind of get freaked out, you get a little mad, you get disgruntled, you go, oh, there's no more deals. Oh, there's no more of this, or it's just too hard now. But what if it wasn't so hard? Or what if you're with groups that taught you how to leverage other things like partnerships, capital raising, other more aggressive fix and flip financing, other commercialized financing and lines of credit that will make sure that you can move and execute on any deal as long as you think it's a great deal and it has a good chance of turning out? Think about that. If you're really great at finding deals and it's going to make money, don't you think other people are going to want to invest in that? That's exactly how it works. If you can create amazing cash flowing assets, I'm telling you, the money will always come. Don't let that be the hurdle that keeps you from moving forward. When I was growing up, there was probably 3 or 4 board games we used to play a lot. Sorry, Monopoly, Cash Flow Quadrant, and Life. Now, Life was kind of interesting. I didn't play it much, but I like, kind of gave me a little taste for the bills and the oddities and curveballs that you might get. Sorry was a little bit of strategy and it was pretty fun. And it just kind of taught you to get all your ducks in order, get those little pieces into their safe zone as fast as possible. Be out there, deal with the risk, handle the risk, get to your safe zone. Cash Flow Quadrant taught me, quit buying the trinkets, quit buying, you don't need another big TV. You need to retire. You need to feel like you've accomplished something. And it was really good at just showing you where are you spending your money and where else could it have gone that would have been a multiplier effect on your life. Those were really helpful concepts for me to learn at a young age. And Monopoly, it's the game I never thought I'd be playing in real life. When you are upgrading your houses for hotels and it's not just a little green shell versus a red shell, it's an amazing moment because it gives you a chance to flex your creativity and your skills and hopefully create really special memories and bonding places for you, your family, your friends, and all your guests that want to go stay there. We want to build things that are just exceptional. And I think if we didn't take these chances to take advantage of taxes, the cost seg studies, the rinse and repeat, the growth strategically, we wouldn't be here. And I think that all of you are probably watching these videos because you're like, hey, I do want to see what that could look like for me. I do think I might have that potential. And when we don't live up to those opportunities to even test if that's a real thing within us, you're always denying how great you can be. And it's just something we got to stop doing. Just like we have to stop denying using bonus depreciation when it's available right now. This is the opportunity that's going to make it a lot easier to scale and get going in real estate, especially short-term rentals. I share all these examples because I've experienced firsthand how powerful building a portfolio like this can be to your finances and your mental well-being as an entrepreneur. When you saw how I was when I was Captain Corporate America with my W-2 job versus now, night and day. I don't know if you've ever taken a personality test, and you kind of see where you identify on the 4 quadrants. Maybe it tells you a title if you use the 16 personalities. That's my favorite one. But as you scale as an entrepreneur, take the test now if you haven't. Take it today and see where you're at 6 months from now, even a year from now. You're going to see that your decision-making skills, your approach to solving problems, your approach to risk and reward have completely changed. And it's proof that your mental anatomy is never going to be the same again. And if nothing else, that's worth growing and proving. And that's why I really hope that transformative journey that I've gone through is something that you'll be able to go through, because I think a lot of people out there really do have that power within them, and they just need the right venue and the right group to figure out how to muster those powers into fruition. So that's what we're here for. Again, I started with an initial investment of only $30,000. That's all I could save. But that one property that I partnered on got me going, and one after the other, a little bit after a little bit, it started to compile, and boom, before we knew it, we had a $10 million portfolio. And that's where we're at now. And we're hoping to teach you to do the exact same thing, but in half the time, maybe even a quarter of the time. Depends on what your capacity is and how much you want it. I promise you, you can do the same. You just got to take some action today. But if you're serious about taking action right now, I'm opening up a few spots for my one-on-one calls, and I'd like to invite you to them. These are strategy calls where we talk about coming up with a custom and focused direction for you to execute on your plan and your vision to create an amazing real estate portfolio. And if you're ready to start that Airbnb investing journey, we're ready for you too. So again, like always, if you found this video valuable, please like, subscribe, share it, comment. Let us know if you have any questions or requests for future videos. I'm going to continue to share some of my biggest real estate strategies and tips every single week, and I hope you're there to follow along. And when you're ready for that serious strategy call, we'll be ready for you too. This is your chance to take advantage of one of the biggest opportunities in our lifetime. Don't miss it.